Welcome to all of my students in today's mentoring session. Today is 21st of January, 9:33 p.m. and we'll be starting with the Nifty futures, Bank Nifty futures and so on till the mid-cap index. And especially people who are watching it on YouTube, just be sure that you watch the entire video. Because if you want to get benefit from this video and understand the entire state of trend of the entire market, how different sectors are going to shape up in next few days, and you will have to watch the entire video till the last. Only then you will be able to take benefit from this education video. All right, so without any delay, let's start the video. And as usual, you know that I have a habit of analyzing the higher time frame first. So this is the monthly time frame, and obviously since today is 21st and we have few days left for this month to complete, but we can see one thing. Even if this candle is not complete, there is some sort of selling pressure coming up at higher levels around 18,350. Even candles have at higher wick over here 18,400 and somewhere over here 18,580. So anywhere between 18,000 to 18,300 to 18,580 or possibly 600, within that 250 to 300 point zone, some sort of selling pressure is evident. That is the only thing which is what I can understand. Yes, market is overstretched in the monthly time frame chart. Other than that, I have no clues from the monthly time frame. In the hourly chart, the trend is still up, but this particular candle is slightly unsettling because you can see the open is below the close of the previous candle, and this particular candle is pretty big in terms of length. The length is the trend is still up in the weekly chart, but nevertheless this candle is a little bit of danger for this Nifty futures in the weekly time frame. As of now, there is not much grave danger in the sense it's not that market is going to crash and it will go for a very big downtrend. As of now, that's not evident, but we have to keep this particular candle in mind because the size of this candle, especially if it was a normal red candle, I wouldn't mind, but the size of this candle, if you see in comparison to these three candles, if I just compare the length of this particular candle in comparison to these three candles, then this particular candle is pretty big. Even this candle is big. So what we can see suddenly out of nowhere, we have two big red candles, which are bigger in terms of size in comparison to the recent big green candles. So that is one thing which we need to keep in our minds. Now in the daily time frame, what we can see that the trend was continuing, and somewhere over here, I think last week also when I made the weekly sectoral analysis, I had shared with you that market is in an uptrend, but we need some sort of consolidation. We need some sort of sideways move because, market was little bit overbought at the higher end somewhere over here. And we needed a consolidation. Maybe a small drop was okay, but the momentum with which market has come down is very, very dangerous. And it is not very easy to digest because this trend was very strong and in very small amount of time, especially from this day, from 17,250 to 18,350, this 1,000 or 1,100 points rally happened very, very fast. And after this stupendous rally of 1,000 points, a sudden drop is, it's not very easy to understand what's happening in the market. So according to me, the trend in the daily time frame is flat. It's not up, it's not down, it's completely flat. We are within a support zone, and this zone is from 17,690 to 17,400. So this entire zone is a support band. Until and unless we don't close below this particular zone of 17,400, we are safe. But once we start closing below, then there will be a danger to the market. So be very, very careful. And on the upper hand also, if you see, I have kept this red line over here. And this red line is somewhere around 18,100. Okay. So even if there is a bounce back, because after 3 to 4 days down move, you saw today we had a small short covering before the close. So even if there is a rebound, do not understand that market has bottomed out just because we have a hammer forming at a support zone or something, you shouldn't understand that, because until and unless it's not a very scalable rally in the sense, if the market moves up for 2 days up and then 3 days down, you're not going to make money. You need for the price to continue in a certain direction for a prolonged period of time to be able to make money from that, right? So if we close below, if we close above 18,100 levels, that will be the first sign that markets are ready to go higher. And this particular fall of 4 days was just a mere correction in an ongoing uptrend. All right. And we would probably have a higher low, because we already have a higher high. This is the previous high. This is the current high. And then this is the previous low. Currently we are over here. So if we start moving higher from here, and if we go above 18,100, that will be the first sign. Second sign is we close above this trend line. This is a probable trend line right now. This is not a complete trend line because it has not been tested the third time. So when we close above this zone, I think then it will be a proper sign that yes, bulls are again back in control of the market. Right? Let's go to Bank Nifty futures. Now, Bank Nifty futures for the first time, I think in months or maybe in weeks, they are looking slightly stronger in comparison to Nifty. Stronger in the sense, yes, I can understand that the price is much closer to the all-time high over here. In Bank Nifty, it's not the same story. But if I compare recent few days over here, Nifty has came down with strong momentum, but Bank Nifty has come down with a sideways consolidation, and then there is a drop basically. So that's what happening. And again, there is a support band over here. In the weekly time frame also, if you check, the trend is up, but if you see the last week's candle also, it was not exactly a shooting star, but there was a long wick. So there is some sort of selling pressure over here at 38,950 thereabouts. And I think this week's candle is also somewhere around that particular level. So there is a selling pressure at 38,950, 38,960. That level is, some sort of selling pressure is coming up. And one reason is due to this probable trend line. Again, this is a probable trend line. This is not a complete trend line. If the prices start bouncing from here and if it tests this trend line, then it will become a complete trend line. Again, just because we have a big hammer over here at a support band and we have a previous high over here doesn't mean that people should start buying over here. No. Until and unless we don't close above this trend line, it will not be very, very decisive, because what is happening, if you remember on Twitter, I had posted one thing that while doing my trading homework yesterday, just immediately I have a habit that after market closes in next 20-25 minutes, I start doing my homework, and within 15-20 minutes, I complete my trading homework for the next day. That's my usual habit. So what I noticed, one thing was that in all the sectors, even if the sector is moving higher or even if the sector is moving lower, especially sectors which were moving higher, I noticed one thing, that not all the stocks were participating. Only few were participating, few were few were even coming down little bit, not with strong momentum, but just slightly. So even if market starts going higher from here, if you see a trend line breakout in Nifty futures, even if Bank Nifty futures in next few days, if it happens, be very, very careful which particular stock you are taking to initiate a long position. If you just say Bank Nifty future is going up and I would like to go along in these 2-3 banks, no, you cannot do that. You will have to pick up stocks properly, watch whether that particular stock is showing strength or not, and then initiate your buy or sell positions, whatever you want to do. Because if you don't do this, you're not going to make money. Trust me. The next few days are not going to be very, very easy. It is for a trader who can choose that this particular stock is more stronger than the other one. So that is what you will need to do. Let's go to private banks. Private banks, I think I don't need to say much to all of you. You can understand very easily. It looks very, very similar to Bank Nifty futures. This is the previous high, which is providing very strong support. This is a Fibonacci retracement. We have a sort of a hammer. But again, until and unless we don't close above this trend line, we cannot be sure that prices will bounce and go higher from here. Because if you just buy in a correction, okay, this is an ongoing short-term correction. If you buy and then after 2 days price makes a new low, it makes no sense, right? Because traders should always participate in uptrends and in breakouts. So let the breakout happen and then, slowly and steadily we'll start participating. PSU banks, I believe, let's go to the weekly chart first in PSU banks, because I think both of the time frames are showing very different pictures. Now, this is the logarithmic chart of PSU banking index. You can see there's a beautiful trend line breakout, and the trend is still up, but you can see this particular zone is not ready to give off the price. Give off in the sense, what I'm trying to say is prices will need to close above this particular zone. Until and unless price doesn't close above this, I don't think it will be an easy ride for the PSU banking stocks. And one more thing, if I convert this candlestick chart in a line chart, so there has been a negative divergence in the RSI at a resistance. So we need to be slightly careful in PSU banking stocks. Metal pack. Now, metal pack has suddenly, it has given you basically a false breakout. You can see this beautiful trend line, and prices closed above this particular resistance zone, above this trend line, stayed above it for 3 days, and it was a valid breakout. But suddenly what happened? Due to the sell-off, prices started coming down in last 3 to 4 days. So that is what has happened. If possibly markets wouldn't have come down, then this would be a very decent, I think, breakout to trade. But unfortunately, price is God, and you have to take whatever God gives you. You cannot do anything. So currently, I would suggest, if any one of you have traded in metal stocks, then just hold them with your stop losses. If the stop losses get triggered, just get out of the trade and just stay put. Don't initiate new trades immediately. Wait and let's see how the sector shapes up in case if the market rebounds and closes above the trend line breakout. Because what happens is, if the prices in Nifty futures close above the trend line, which I shared with you in the starting point of this video, and the prices in metal pack, they don't close above this trend line, or they don't close above this particular high, I think this sector will start underperforming, and possibly we'll see a sideways consolidation of next few days. Auto pack, I think, has been a very good outperformer recently, but again, you can see just due to the recent correction, prices have come down. I would say nothing much to say over here. If you are holding on to trades of auto pack, just hold them with trailing stop losses and keep on managing your risk, keep on trailing your stop losses and wait, because ultimately you cannot do anything. We also know that budget is also coming up very, very soon. So we don't know how markets will behave on that particular day. And we'll have one more session possibly the next week. So we'll understand in next week how price is behaving. So thoda sa idea humko aa jayega, and on that particular basis, we'll be able to take a call. And why I'm stressing so much on auto pack, because overall sector has performed very, very nicely. This is one of the strongest sectors according to me. But again, if entire market comes down, then even this sector, I don't know how much it will be able to hold off. Just for your knowledge, I've just shared the support band. It's 11,255 to 11,055. So until and unless the support is not broken, we are safe. If this starts cracking, then you will need to be a little bit careful. Financial industries, I think you can see why the sector has come down, why prices have come down, because they faced resistance from this particular Fibonacci extension. And the trend is flat currently in the finance pack, and we are at a support. If we rebound and if we start going higher again, if you want, you can, just for your knowledge, you can just keep this particular trend line. And this is a proper trend line. This is not a probable trend line. This is already a trend line because it has been tested 3 times already. And once we close above this, then I think we can say, yes, again, we are back in business and prices are moving up. Until and unless this doesn't happen, please stay put. Don't jump into trades recklessly. IT pack. IT pack, I need to share with you the monthly time frame. Okay. I do agree today is 21st and this particular candle is not yet complete. मैं समझ सकता हूँ बिल्कुल, but we have possibly 5 days more for this particular month to close, possibly 6 days. Okay. But as of now, if you just look at this particular price action without any indicator, without anything, you will just simply understand that there are three, you can say inverted hammers or shooting stars, a big green candle, which was amazing rally in the IT pack going on in last few days, and then sudden red candle. Now this sudden red candle continues little bit lower. It will become a very dangerous pattern and possibly you will have to stay away, might be, from this sector for next few weeks, not just days. As a bull, you will be, you will need to stay away from this particular sector if you are only a long only trader, because already in the weekly chart, I can see the trend is now flat. It's not even up. And in the daily chart, the trend is down. It's only that we are holding on to this support. We have this candlestick cluster. We have this trend line breakout. So it can happen many times. It does happen that prices do come down to test the trend line support, the breakout which happened initially. So if this is broken, if this first support and if the second support is broken, maybe a little bit of downside momentum will continue. Pharma was looking pretty much promising over here, but as I always say, that you need to be very, very careful when you're trading in pharma. You can say again, prices have come down and they are back at supports. You can see 1, 2, 3, 4. Almost 3 times we have seen, this is one time when the pullback was decent. This pullback was not that great, but this pullback was very big. So in case if this particular support band is broken, then you will see prices going down further south. FMCG pack. FMCG pack, if you look at the weekly chart, the trend is flat and it's trying to go in a weekly downtrend. This is the first sector, I believe, which is trying to actually start. I'm not saying it is in a downtrend. I'm saying it is trying to start a new downtrend in a weekly time frame. You have to be very, very careful. And the sector is doing nothing but within the range. This is a resistance point. You can see this was a previous high. Prices were not even able to close above this. Just stopped out before that, and now it's coming down. And I think last 2 days low is a support. If you close below that for a day or two, we'll see downside momentum continuing again. A realty pack. Let's check the weekly time frame first. Weekly time frame, you can see we had a decent base formation over here in where we had a hammer. Prices started moving higher. We also saw probably prices will make a new uptrend, a fresh uptrend, but it didn't happen because prices were not able to close below this previous high. If this would have happened, then we could have started a new uptrend in the daily chart, which did not happen. And now we are still range bound. On the upside, this is the resistance at 527. If this particular level is taken off, then maybe we'll be starting a new uptrend. And on the downside, this is an entire support band from 485 to 474. And if we close below this, again, we'll see prices drifting down. Consumption pack. Now, consumption pack was one sector from which I had a little bit of high hopes. But unfortunately, just due to the strong sell-off in the market, we saw prices coming down even over here. What I can only say is we have a high wave candle over here. Okay. High wave candle at a support after a pretty big sell-off. Not a big sell-off, but I mean, in the if you check the hourly time frame, I'm pretty sure that the RSI will be somewhere around the oversold zone or something. And then if we are at a 50% retracement with a high wave candle, and if market starts moving up from higher from here, then I think you need to keep a close watch on this particular consumption pack. All right. In weekly chart, the trend is flat as expected. The trend is flat. It's not up. But yes, in the daily chart, we are at a decent support, a good candle. But again, we need a rebound from your strong rebound, not just 1 or 2 days pullback, strong rebound. Then you can start checking the stocks in the consumption pack. Mid cap index, let's check the weekly time frame first. Weekly time frame, again, we are still in an uptrend, hanging on to supports. Overall base formation was very, very strong, I should say. Not just strong, but very, very strong. 3 consecutive bullish candles and suddenly one big red candle. Again, if you see, the size of this red candle is pretty large in comparison to this green candles. This is not good news. We just need to keep this in our mind. I'm not saying that the sector has stopped out, but you have to certainly be very, very careful. And we are at a support zone. Obviously, if we crack below 29,866 on a closing basis, yes, then we'll see downside momentum happening over here also. And if there is a pullback happening, then again, if you want, just for your reference, this is one resistance, horizontal 1 point, and second, you can keep this trend line just for your reference. So somewhere over here in this zone, basically at 32,200, this needs to be taken out. Then we'll see fresh buying coming up in the mid cap index. Till that doesn't happen, be very, very careful. And if you see the difference between this low of 30,330 to 32,000, this is very high. So if entire market starts moving and there's a 2,000 point gap over here, then maybe somewhere over here at 31,450 or 31,300, you can start nibbling into mid cap stocks, but just start to buy 1 or 2 stocks and see if market is sustaining or not. If it sustains, then maybe you can add new positions basically above this level. What will happen over here is if you don't buy anything and if the entire mid cap index just keeps rallying, probably you will be forced to buy at a very highly overstretched level. So if you want to avoid that, you can start nibbling stocks somewhere over here. And if you are possibly lucky enough and the prices continue to rally higher, then somewhere over here don't buy, then wait for the prices to close above this level. Then you can start adding the positions once again. All right. So I hope this particular educational video, especially for the people who are watching on YouTube, has been helpful. Let me know by your comments below and share this educational video with others who find this particular video very, very helpful. Thank you.